Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Tuesday, July 11th, and then we'll see how things look for Wednesday, July 12th. We had an up day. Unfortunately, we're still below upper resistance. However, on the positive side, we're above support. And we have the CPI coming out before the market opens on Wednesday. We have some positive things that we can dwell on, and there's also some things that we need to be worried about. We'll have to see what the market does with CPI and if anything gets decided when that report is released. Let's go back and talk about what happened. Support came from the broader market earlier in the day, but then the mega caps came in later on and showed some strength. Value and small cap stocks continue to outperform. We want to see growth outperform. That's where we buy low and sell high. But we also, if you're more positive, want to see the whole market doing better. But growth is underperforming right now. On a short-term basis, we have our 20-period exponential moving average study that's starting to get extreme positive, the Williams percent R, and the stochastics. In the intermediate term, we're keeping an eye on our oscillators because of those negative divergences that we're seeing pretty much in all of our oscillators. We have the Sean trend meter, and now a new addition is the BPI that is still showing some strength and going higher. There's two ways we can look at these overbought conditions. We can say, yes, we're overbought, we've gone up too far too fast, and we're due for a pullback. On the other hand, you can say, well, this is showing good momentum in the market. Unfortunately, as long as we're below resistance and above support, that hasn't really been decided yet. The dollar was down and interest rates were mixed. All of the yield curves that we follow remain inverted. Sentiment is still extreme. It ticked up to 79 where it had been at 78. Our trend is positive and the green line is turning back up, but it's below its moving average still. However, both the ADX and the moving average are above 20. Because of the CPI, I'm keeping our bias and our momentum now at mixed because it's pretty much a roll of the dice as to how the market's going to react, or if it's going to even react at all. The economic reports that came out, we just had the NFIB Small Business Optimism Survey that came out. A little bit of an improvement. It came in at 91, where last time it was at 89.4. Here's our intraday chart showing how we had a positive open above R1. Didn't quite make it up to R2 before pulling back down and finding some support at the unchanged level. Then we started to drift back higher, actually broke above R1 and then R2, drifted off a little bit, but then later in the day, we were able to get above R2 and close almost at the high. We never made it up to R3. This is a little bit of a concern. When we look at growth versus value for the SPY, it did underperform and was actually negative on the day. We're also keeping an eye on this chart. This is the correlation between the VIX and the S&P. We're going above the dashed line now. We'll see if this continues to go up. Once it starts to come down, that's really when we start to see some kind of a signal. Typically, it's a negative signal, but sometimes it can also be a positive signal. The trend shows that the green line is going back up, but the ADX is coming down below its moving average. We still default to the positive because the green line is on top and advancing. Here are our oscillators showing where the S&P made a higher high, but we're making a lower high with all of our oscillators pretty much across the board. Now, some of that has to do with mathematics. When we're coming up here and making this first high, they're calculating the indicator with a lot lower prices. Then we come down a little bit, we start to go back up, make a new high. Now the indicator is being calculated with higher values, and so it can't help but start to show a divergence. However, so many people use this as part of their decision making that we still pay attention to this, and oftentimes it becomes a self-fulfilling prophecy. We're also seeing that same thing in the RSI 14 and 9 where the S&P made a higher high, but we're showing a negative divergence with the 14 and the 9-period RSIs. We are showing some improvement with the transports. They were able to break above this previous high, and that is helping the market. We saw a little bit of improvement with the utilities, but they're still declining overall. When we look at the transports to S&P 500 ratio, this is going up, and that's what we want to see in a positive environment. We're still dealing with the 61.8% retracement level for the NASDAQ. We have not been able to get above that level or close above that level. That would turn things back a lot more positive. If we hit this level and start to come down, there's always a chance it could turn things more negative. We're also dealing with the previous high with the NASDAQ 100. We have not been able to get above that and close above that level, but we also still have support below current prices. We're looking at home construction, which again, if this was really looking like the economy was going to fall apart, would it be outperforming bonds the way it is? Probably not. So we bring up this chart from time to time just to show that home construction, which is very heavily interest rate sensitive, is continuing to outperform bonds. This is a chart that I showed yesterday. I also talk about it in the full length video. This is the S&P 500 based on an arithmetic scale going from the 2009 low, and then we draw a trend line up to this other low, and then we drop below that, and what had been support now becomes resistance as we're going up. We also have the 2018 high as well as the 2020 high. Well, then we broke above that, came back down, but where we're at right now, it's not really helping us all that much. But when we switch to a log scale, and here's the 2018 high and the 2020 high, and extend this over, this could be providing overhead resistance. Then, just for kicks, I went all the way back and extended this trend line back further where we hit the .com bust low back in 2002, and then I extended it all the way down to the 1987 crash. And a lot of people that are perma bears, they're always negative about things. Oh, they're just salivating over this like something fierce. But we just look at this over here at the top. This is what we're dealing with to see, are we going to be able to break through that? Or is this going to cause some resistance and we're going to start coming back down? We don't really know yet, but we just want to be aware of this for right now. We also look at the weekly chart of the NASDAQ 100 going up to where we're at right now, also providing overhead resistance. Then we look at the ratio between the NASDAQ 100 and the Dow, where it had really topped out back in 2000. That was the .com boom. And then after this was the .com bust. And then we spent the next 20 years coming back up to where we're at now. We're back up at this level, wondering, is the same thing going to happen this time? We have the high-tech stocks, which is the NASDAQ 100, which are more speculative, and these are the growth stocks, compared to the blue chip stocks, the more boring companies that have been around a long time and are considered to be high quality. Well, the NASDAQ 100 has really been outperforming the Dow, but is it getting out of hand? Again, we'll use other charts to evaluate this and make determinations as to what's happening. So what's our outlook for Wednesday? The CPI will be released, and then we're getting the PPI on Thursday. We're still positive with the technicals, and support continues to hold. If we break below that support level, that could shift things much more negative. We're getting the CPI that will be coming out, the weekly MBA Mortgage Applications Index, and then the Fed's Beige Book. The big one is the CPI. Then we're keeping an eye on geopolitical events, but for right now, it's all about inflation and interest rates. Here's the updated economic calendar for the week. And then we look at the Stock Traders Almanac statistics for July 12th, where we're neutral to positive with the Dow and S&P, where we're more positive with the NASDAQ. We will be on the 7th trading day of the month, and I also have it marked here where CPI will be coming out. And we're also keeping an eye on the NASDAQ, which tends to perform well into the middle part of July. Now, this is just historically. We can always deviate from that. We're just going on the average of what has happened in the past. So our scenarios, we can't really go with the down one now with the up day that we had. Our technicals are positive, but if we start to drop below support, that's going to switch things more negative. But we're not seeing that yet. So we're going with the up scenario for right now, but we still have overhead resistance above current prices. The ADX is starting to turn back up. The green line is going up, but it's below its moving average, and both the moving average and the ADX are above 20. So our warning signs, the longer-term trend signals, those long-term S&P charts and NASDAQ 100 charts, they might be signaling that we're hitting a top, but then again, they may not be. There's been other times when we've looked at charts like this, we just blew right through that resistance. But we want to be aware of these things. The oscillators continue to diverge negatively. The VIX is showing that there's not a lot of fear. That's why we're looking at the S&P to VIX ratio chart. The cumulative new highs, new lows for the NASDAQ continue to show weakness. We're still above the 3-month yield level that we were at back in 2007. If that starts to drop back down, will that be a warning sign? S&P growth is lagging and showing some weakness. It's still in an uptrend, but this is a little bit of a concern for us. And then earnings season is starting to ramp up. As I said in the full-length video, the bank stocks are some of the first stocks to report. keep an eye on JP Morgan. They're the biggest. And so if they do well, it might foretell that other bank reports might be positive also. On the positive side, we still have the seasonality and setups that I went through in the weekly video. Those are still in the background. Our daily chart for the special K is positive, where the weekly chart is negative. Our longer-term equity put-call ratio continues to decline, which is positive. The S&P is still above the downtrend channel upper line. This is one of those resistance levels that I'm talking about, where it looked like we were going to hit that, and then we just blew right through it. We're still in a risk-on posture. The Dow transports are breaking out and showing improvement. Lower price levels so far have been providing support. The S&P is outperforming utilities. The NASDAQ, we're worried about that 61.8% fib retracement level. And with the NASDAQ 100, we're worried about that previous high. They're still hanging in there and looking positive. But unless we can get above those levels and then close above those levels, that's going to continue to be a problem. The Staples to S&P 500 ratio is declining, which often gives good support to the S&P. The Russell 2000 index gave us a recent golden cross, and the mid-caps also gave us a recent golden cross. Please be aware that the S&P small cap index that we also follow has not generated a golden cross. Small and mid-cap growth continue to be positive, especially mid-cap growth. And the Vortex indicator, which was on the negative side yesterday, well, it switched back over to looking positive today. So our conclusion, the S&P, it remains positive, but if we see some real selling with some conviction, that could signal a switch. In the short term, we're getting to the point where we're a little more overbought. We have some of our indicators that are extreme, but they could still go further up. In the intermediate term, we need to see more follow-through buying. We need to get above those resistance levels. However, in the long term, we still remain positive. Thank you. I hope you found this helpful. Have a really good day. Please feel free to check out the full-length video, and I will talk to you in the next video.